Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. We're excited to discuss Solo 401k Contribution Calculator 2025 live examples for sole proprietors, including Mega Backdoor Roth. So in today's session, we'll cover contribution clarity, discover how much you can contribute based on your net income, contribution split, understand the breakdown between employer and employee contributions, Mega Backdoor Roth, learn how after-tax contributions enable this powerful strategy. We're going to go over some real-time demos. It's really the sole proprietor's essential guide to retirement savings. So why this session is for you: unlock full limits, demystify how much to reach the full 70,000 or more if 50 or older contribution limit, avoid pitfalls so you can identify and prevent common mistakes sole proprietors make with solo 401k calculators, actionable tools, gaining the clarity and practical tools needed to optimize your 2025 contributions. So by the end, you'll have the confidence and knowledge to make 2025 your most impactful year yet for solo 401k contributions. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professionals. So if you have questions or topics, whether on this topic or off topic related to solo 401k, other solo 401k topics, please don't hesitate to chat over questions or topics that you would like to discuss. Also, please subscribe to our YouTube channel, our LinkedIn channel, and or our X channel, wherever you're watching today, as we'll get notifications of when we go live. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back again at 1 p.m. Pacific, 4 p.m. Eastern. So for example, tomorrow in the morning session, we're going to discuss how does a solo 401k reduce taxes. In the afternoon session, we'll be back with more contribution examples specifically for S Corps. So on our website, we've got our calculator, and I want to run through some examples as part of today's discussion. So if you go to mysolo401k.net and then under Learn, click on Online Tools, and then that'll take you to this page. And from here, you can click on the Solo 401k Annual Contribution Calculator, which will open up here, and you can create a PDF, or it'll generate a PDF. You can enter your specific numbers, etc. So let's go through some examples to really understand it. But to first lay the foundation, solo 401k eligibility is for a self-employed individual with no full-time W-2 employees. So an owner-only business. Think like an independent contractor, solo practicing professional, like a CPA or attorney or realtor. The key is that you report earned self-employment income, and there are no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Some of the top eligibility considerations are going to include whether you need to have a separate entity, like an LLC or an S Corp. Ultimately, the answer is no. The key is that you report earned self-employment income. So for example, income reported on Schedule C for a business tax as a sole proprietorship, or income reported on a W-2 in the case of a self-employed business taxed as an S Corp, or income reported on line 14 of K1 if your business is taxed as a partnership. Your spouse or business partner may participate as long as your spouse or business partner are reporting their own earned self-employment income, such as their own Schedule C or their own W-2 or their own line 14 K1 income in the case of a business taxed as a partnership. You can set up a solo 401k even if you have a W-2 day job, even if you participate in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So to set the stage now with the contribution calculator, specifically, we want to go through some live examples for sole proprietors and then focus on Mega Backdoor Roth as well. So let's set the stage though with a few base assumptions, and then we'll change some of the assumptions just to illustrate different points. We'll try to go through at least 3 or more scenarios. And again, if you have questions or topics to discuss, please feel free to chat it over and we can go over your questions, whether it's on topic or other solo 401k topics. And if you're finding this to be helpful, if you please like on whatever platform that you're watching on and share, that'll help us get the word out to other self-employed individuals like you who may be trying to catch up on their retirement, just would value this information so they can secure their own retirement. So let's assume that the self-employed business is taxed as a sole proprietor. Let's assume it's one participant who's under 50 years of age, right? And their goal is to maximize pre-tax contributions and then Roth and or voluntary after tax. So to help illustrate this, I also want to use an Excel spreadsheet here. So let's get that on the screen. All right, so let's take this down. Let's go over to the calculator. So, and again, you can find this on our website under Learn and then Online Tools. So we got John Doe, whose age, let's assume 35, and their income, let's assume it's $100,000. Now this is going to be line 31 of Schedule C from your 1040. So after your expenses from your business, etc., your net income's $100,000. So let's run the calculator. So your ability to contribute is going to be based on different factors. One factor is your age. Another factor is whether you make contributions to another plan like a day job. Another factor is how your business is taxed. So in the case of a business tax as a sole proprietorship, you have to run a pre-calculation where you take your net income reported on line 31 of Schedule C less 1/2 of the self-employment tax. So this calculator will run that pre-calculation. So you can see here that 1/2 of the self-employment tax is here. So we got line 31, we're assuming is 100,000. Then we've got a 1/2 SC tax. We got that there from the calculator. 7,064.78, meaning our self-employment compensation is 100,000 less 1/2 of self-employment tax. So that's 92,935.23. So in this scenario, the person first wants to be able to maximize pre-tax contributions and then would make whatever's left as either a Roth contribution or a mega backdoor Roth contribution. So here, this person, we're assuming, doesn't make contributions to another plan, like a day job plan. Let's assume they're under 50. We're assuming the year is 2025, right? So for their age is under 50. So in terms of that employee bucket, for 2025, they're going to be able to contribute $23,500. And that can go directly to the pre-tax. They can do 20% of that same self-employment compensation figure as a profit sharing contribution. So that's this number here. The calculator calculates it. It also calculates the 23,500. So that's giving us there right now, what's the total that they've contributed? And that would also go into the pre-tax bucket. So they're doing 23.5 as an employee plus 20% as an employer. Now their total to their pre-tax is 42,087.05. So they can do the difference up to the lesser of their self-employment compensation or the overall limit as a voluntary after tax, and then either transfer that to a Roth solo 401k or Roth IRA. That's your mega backdoor Roth contribution. So that's going to be 70,000 because that's the lesser of the, so it's the lesser of self-employment compensation or the overall limit. 70,000 is the overall limit for 2025. 70,000 less their employee and the employer. So they could contribute another 27,912.95 as an after tax in that scenario. Okay, great. So now let's run through a different scenario. Now let's assume that they have $50,000 of self-employment compensation. So how does it change? So now let's assume they have $50,000 of line 31. So we got to go back to the calculator to determine 1/2 of the self-employment tax. We'll let the calculator calculate that amount. There it is. So here, 1/2 of the self-employment tax is $3,532.39, which means that their self-employment income is $46,467.61. Okay, great. Again, we're assuming they don't make contributions to another plan like a day job plan. They're under 50. They first want to maximize pre-tax, then make any additional contributions as Roth or mega backdoor Roth contributions. So they still can make that same $23,500 as a pre-tax employee. Now they can do 20% of the smaller amount as a pre-tax employer. So their total contributions at this point is $32,793.52. Now the calculator doesn't calculate the after-tax limit, but we can easily figure it out here, right? It's the lesser of self-employment compensation, which is the $46,467.61, less their employee, less the employer. So in other words, the difference up to that amount. So that'd be $13,674.09. So they can make as an after tax and then move it either to a Roth solo 401k or Roth IRA. So now let's go through another calculation. So here we're going to assume that they maximize contributions to their day job plan. But again, they're still trying to first maximize pre-tax, then do whatever else is available as either Roth or mega backdoor Roth. And we're assuming it's back to $100,000. So let's run the numbers here. So here they got $100,000 of line 31 of Schedule C. So net self-employment income, the self-employment tax, we already calculated that. That's $7,064.78, which means their self-employment compensation is $92,935.23. It's 2025. They're under 50. They first want to maximize pre-tax. Now, they're not going to be able to do any more employee contributions because here we recognize that they've already maxed out contributions to their day job plan because they can't make any more pre-tax employee contributions to the plan. They could still do the 20% as a pre-tax employer, right? So that'll go into the pre-tax. Their goal is to first maximize the pre-tax contributions. So now they can do the difference up to $70,000 because remember they can do the lesser of self-employment compensation or the overall limit. They could do the difference up to $70,000 as an after tax. So now that means they're going to be able to do $51,412.95 as an after tax contribution. Okay, great. So now let's change up the scenario and let's assume that this person is only interested in making Roth or mega backdoor Roth contributions. So we're going to start with the same $100,000 of self-employment compensation. We know 1/2 of the self-employment tax already is $7,064.78, which means that the net self-employment compensation is $92,935.23. Again, for 2025, let's assume they're under 50. Let's assume that they haven't made contributions to a day job plan. So they're going to make this employee contribution as a Roth contribution. They're going to be able to do $23,500 directly to the Roth. Let's assume that they don't make any employer, because remember, this person's only interested in making Roth or mega backdoor Roth contributions. So they just skip the employer and then they do the difference up to $70,000. So that should be $46,500, but we'll just run the numbers just to be extra sure. Yep, $46,500 as an after tax, and then they move it over to the Roth. So at the end of the day, they've got $70,000 in their Roth solo 401k. Okay, great. Well, hopefully that's been helpful to run through some examples, see how this contribution calculator works. Again, if you're finding this to be helpful, please like, please subscribe so you get notifications of when we go live. We go live twice per day. Please share with others in your network that might find this to be helpful, who maybe are self-employed and are looking to catch up on their retirement savings. Please feel free to access our other resources. We have a community of over 30,000 members, a vibrant community. We have forums. We have a library of videos and webinars. It's totally free to join. mysolo401k.net/my community. We have the industry's first AI, solo401k.ai, which you're totally welcome to use. It's a great way to quickly find answers to questions and other resources. So again, thank you so much for the participation today. And until next time, take care, everyone.